All right. So welcome back to the to chapter 12, right? We just yesterday we talked about how we figure out the employee taxes, right? What are the necessary taxes, federal taxes that we have to take out from an individual's paycheck and how to calculate it, right? We talked about how to calculate federal income tax withholdings using the circular e-table, right? We also talked about what the Federal Insurance Contribution Act is, which is Social Security and Medicare. Okay, so of course you are subjected to have to take this out of the person's paycheck, right? Now, as the employer, your responsibility is to withhold this amount from the individual's paycheck, and then you are also responsible to submit these contributions, right, to the federal government. All right, that is your responsibility, right? That's why you are withholding it. It's not like the employee is going to take the entire check and tell you, here, I will pay for my own Social Security and I'll pay it into my federal income tax. No, they tell you to do that and you're responsible to pay into it, okay, for them. Okay, you're taking the money out from their paycheck to put into the federal income tax withholdings and the federal insurance. Okay, that is the only thing that is a mandated federal tax that you have to and are required to subtract out from an individual's paycheck. It depends on what state that you are currently doing business in. If the state requires any state taxes to be removed, okay? Because then if there is a state that does have those taxes, so for example, I think California and New York has them. But if they are required by the state, then you are also subjected to also calculate those state taxes and take them out of the person's paycheck. But we live in the state of Nevada. There is no state taxes, so the only thing that we are required of is to take out federal taxes, okay? Other than that, right, any other benefits or deductions are going to also be either deductions from the paychecks or, benefits to the paycheck, okay? But in this case, we don't have any benefits, anything that we've mentioned here, but as the list goes on and on, if you do have that, again, just visit irs.gov/publication15 and it will give you all the calculations based on that. Okay, and what you have to do when you have those extra benefits and extra stuff, okay? So now, that was just in the employee's portion of the taxes that you had to calculate. Once you've done that, now you need to see what's your responsibility for having employees. So now you need to deal with employee taxes, okay? So first thing you got to do is we have to also contribute to the individual's Federal Income Contribution Act as well. So whatever they put into their Social Security and Medicare, we as a company must match them 100%. Okay? Meaning we got to put into their Social Security and their Medicare as well. Okay? So since we are currently working on one individual, right? Our taxes is going to be based on that individual's earnings once again. So that means for per case per scenario, right? Whatever the amount that this individual earns is what you're going to calculate for your portion of the taxes that are required to cover for having that individual as an employee, okay? Now, everybody else, you have to do the same calculations over and over again for each and every individual. So not only do you have to deal with one person, right? You have to deal with calculating your side, your responsibility for that person, and then you have to do the same thing for everybody else. So that means if everybody has a different paycheck and have a different pay rates and have a different calculations, right? You're going to be basing it upon those, okay? So again, that's double the work for double the person, for just one person. So That is exactly why you're better off paying someone else to do it than having to do it yourself manually. So in this case, right, so it's based off of the individual's earnings. So we have L, right? L, who's earned $686, right? So that means we must match her amount that she put in for Social Security and Medicare as well, right? And it's the same numbers, right? So whatever she put in there, we must match it 100%. So in this case, 6.2% plus the 1.45% will give you the 7.45%. So in this case, if L earned at $686, that means for Social Security she put in $42.55, so will we. Okay, and for Medicare as well too. So in this case, $9.95. So in grand total, our portion to also pay into L's FICA is going to be a grand total of $52.50. Now, depending on how your company does it, you can have it together or you can have it separate. It doesn't matter. As long as you know that whatever the employee has put in, you must match them 100%. So oftentimes you'll see them separate. Sometimes you'll even see them together. Okay? Because at the end of the day, you're paying all into one organization, which is the federal government. Okay? So now that we have that, that was just only one portion that we have to, for taxes, that we have to calculate, which is already calculated because we already calculated from completing L's, right? So we just copy and paste over what the calculation was whatever FICA that we calculate for L, we need to calculate the same amount for her too. Okay. Now other employer taxes that we are subject to do is going to be federal unemployment tax, okay, also known as FUTA, right? This is the one that's very, very popular, where it's right here where it does say here that this is a federal tax that is required to be submitted, okay? So in this case, federal unemployment, right, can range between anywhere from 0.5% to 6%, right? Now, what is this rate going to be based upon? This rate is going to be based upon a couple things, right? You got one, how big is your organization? Meaning, how many employees do you hold, right? So in this case, if you're anywhere from, really small business, your percentage isn't going to be that big, okay? And then next thing is going to be how often and how many payments of liability payments have you paid? Because if you do not pay your federal income taxes or pay your federal unemployment taxes, right, you can be subjected to have an increase in this percentage rate. Okay? So again, knowing how much money you owe and how many payments you've made is going to also determine the rate that you're going to be designated as, okay? Now, in this case, I don't know what that percentage is. You're going to have to figure that out by going to a tax accountant to get connected to the IRS for you to determine what percentage number this is. Now, in this case, for this class and for this class only, right, I want to use just 6%, right? Make it easy, okay? All right, so usually you start having this percentage after the first $7,000 has been paid out, okay? And then, of course, this is where you're also going to be filing the Form 940, right? 941, 943. There's a bunch of them that you have to fill out. This is your federal taxes that you have to pay, okay? So for federal unemployment, it's going to be 940, okay? Social Security, Medicare is going to be 941, etc., okay? And of course, we have to complete that file to ensure that you've made your liability payments, okay? And of course, yes, FUTA tax rates are going to be based on how much you owe and how big your organization is. So in this case, for this class, for federal unemployment, it is a mandated tax because it's federal. So therefore, I only want you to know just 6% because that's what the number we're going to be using in this class. And keep it sweet and simple. Another one that you are obligated to have to pay to is going to be your state unemployment tax. Okay? In this case, in the state of Nevada, you are required to pay the state unemployment tax. Okay? All right? This isn't one of those exceptions where you're a state that doesn't require state taxes, right? In this case, the state unemployment tax is a requirement. Okay? There's also different names that you can refer it to as. I believe in the state of Nevada, it's called SUI, State Unemployment Insurance. But SUTA, it doesn't matter what it is as long as you understand that it's state unemployment. Okay? But in this case, state unemployment is going to be anywhere from 0.25% all the way up to 5.4%. Okay? All right? So that can also range, right, depending on the situation that your company is in. Right? Now, again, for state unemployment, you can collect up to $36,600. Right? So that's the max cap that you can contribute per year. Okay? And then, of course, new businesses automatically get charged, or in this case, have to calculate at 3%. Okay? That's what the Nevada, the state Nevada website told, basically got. They said that all new businesses must start off their state unemployment at 3%. Okay, so in this case, that's just a fun fact for you to know. So in this case, since we are going to be doing a fictitious business, right, we're going to pretend that we're starting from scratch. So we will be utilizing 3% for this class. Okay, but know that these will range based on the liabilities that you owe and so on and so forth. So there's federal and state unemployment. Okay. Other payroll taxes and costs. Well, in this case, of course, if you have to pay for sick pay, right, you have to consider that, pay for vacation pay. If you are doing a retirement benefit plan, you need to figure out what kind of numbers you're going to be giving your employee, right? Usually you have the either dollar per dollar match, or you have the 50% match, or some kind of rule where if they put a proportion of their paycheck in, you either match them 100% or you match them 50%. Okay? But usually the maximum that you can get out of a paycheck is up to 6% of the individual's paycheck. So in this case, there are, again, you have to come up with these company policies to ensure how much money you're going to be giving your employees, because again, benefits and deductions are very costly. Okay, especially when you provide insurance and you say, don't worry, all medical expenses will be covered 100%. Then that means you're paying your employees for their medical insurance. So if they go to the doctor, who gets to pay the copay? You do, okay, as the employer. All right, that's something that you have to figure out what is the best for you. Now, most cases, medical insurance could be covered 50%, right? The 50% covers by the employee. The other 50 is paid by the employer. And usually if that happens, then when you go to the doctor's office, there's always a copay, right? Now, that's usually what that is. So again, whatever that you provide are going to be either additions or deductions to an individual's paycheck. So in this case, one thing that's going to be super important and is a requirement for the state of Nevada is going to be workers' compensation. Okay? What is workers' compensation? Workers' compensation is a means for you to protect yourself from any legal issues that come across when an employee gets injured on the job and they have the potential to sue. Okay. Okay, so this is a legal protection for yourself as an employer. Okay, you definitely need to have a workers' compensation, especially in any industry that you are currently working in, right? Or currently establishing your business in, because in this case, right, that's the thing. Anybody can get injured on the job. All right. And if you do not pay for the medical expenses, that's an immediate lawsuit right there, because they are your responsibility. They are your liability because they are currently working on your grounds. Okay. So you want to make sure that that's a huge risk that you have to take. So in order to protect you, you should have a workers' compensation program or some kind of protection legal program that can cover you for making those payments for the medical expenses in case you do get injured, or to protect yourself when, if and when an employee decides to file a lawsuit against you, that you can cover those costs. Okay. So in this case, right, for a small business, you can do 1.36% of the individual's paycheck. It just depends on what the job is. If you're a construction worker that, is doing hard labor, that's probably going to be a much higher percentage, because again, the likelihood of getting injured on the job is very high, and those injuries can be very severe. So again, the percentage is going to be based on what you're going to be, requiring of the individual. But in this case, if it's like a small coffee shop, they just burn their hand, 1.36% is enough. Okay. So what is 1.36% of? It's going to be of the individual person's gross earnings. So in this case, that's just a number, okay? You are by law required to have some kind of workers' compensation program in the state of Nevada, okay? So for this class, we're going to be using 1.36%. So now that's pretty much all of the employer's responsibility for taxes here. So what are those going to be? So we said FICA, which is going to be the Federal Insurance Contribution Act, which we just talked about, right? It's 7.65%, which is 6.2 plus the 1.45, right? That's going to give you a grand total of 7.65%. Which we already calculated in the previous one, right? We added up the Social Security and Medicare and got a grand total of $52.50, okay? You have FUTA, which is at 6%, right? So it's going to be based on gross earnings. So $686.25 times 6% is going to give you $41.18. And of course, SUTA is going to be 3%. So you're going to take your gross earnings, multiply by 3%, it's going to get you $20.59. And of course, we have to top it off with workers' compensation, which is going to be 1.36%. So that's going to be off of gross earnings. So that's going to give you a grand total of $9.33. Now, these are just the bare minimum that you should be required of, right? This is excluding any benefits or any insurance plans or any retirement benefit plans, okay? This is the bare minimum that you have to require to be taken out, okay? And so how are you going to recognize it? These are going to be payroll expenses, payroll tax expenses, right? And each individual one, right? FICA, you have to owe the government money, right? The federal government, boom. You owe the federal for unemployment, boom. And then you're going to owe the state unemployment, okay? And then workers' compensation is going to be whatever law firm that you're going to be associating with, okay? And you're going to owe that person. Okay, so in this case, you're going to tally them all up, and for L, just working at our company per week is going to cost me roughly $123.60 for every paycheck she earns, okay, per paycheck. So if you multiply this by 52 paychecks, right, that's roughly almost $6,000 worth of liabilities that you have to pay towards having L as an employee. So any questions here? Yes.
So we are paying those taxes out of our profit, right? Whatever the money we make.
Yes,
Okay,
right?
that's all.
This doesn't come from the employee because why is the employee having to pay for your responsibility as an employer's responsibility?
Right?
Right? So this is
So,
your responsibility for having employees. These are the circumstances and responsibilities that you have to pay for having an employee. So again, not only do you have to pay L $686, you have to pay $123 on top of that to protect her as an employee. And that's just bare minimum. Don't forget, what about the benefits that you give them? What about the deductions that you give them? Those add up. And again, that's why employees are so costly because you have to come up with almost $1,000 for each employee for every week. All right. And if your profits aren't up to charts like it should be, maybe considering not having employees is beneficial to you. Now, again, most small companies, right, are going to have to make that executive decision where they have to literally tell their employee, I'm sorry, I'm a new business. I cannot provide you benefits now, but if you continue to keep working for me, maybe in the long run, I can provide those benefits for you later in the future when we make enough money. But for now, you can't. And that's why small businesses, they don't get high caliber working employees because they can't afford to protect or provide for their employees. Okay? Yes.
I don't know if this is correct or not, but isn't it like when you get paid or whatnot, the more you get paid, the more taxes they take out, or is it just the same percentage every time? It just looks like it's more because you got paid more.
In this case, percentage means it's a portion of the money. So yes, so if you earn more, that percentage is going to take out more.
Gotcha. Okay.
So if
But the
you
percentage is always the same though, right?
for federal insurance, yes. FUTA will depend on your business organization. It depends on what the tax accountant says. Now, if you fail to make a payment, then of course that's going to rise up. So, federal unemployment, state unemployment are going to vary depending on what your organization is. Workers' compensation is also going to vary on how labor intensive your work is, right? So the ones that's going to stay the same is going to be your federal insurance contribution. It's always going to be 6.2% of the gross pay, and then Medicare is always going to be 1.45%. Now, the federal income tax withholdings, if you earn more, then you're going to fall in a different bracket, which is going to fall into a different percentage. So, yes, in this case, the more money you make, it really depends on what the situation is. You will for sure get taxed higher. 100%. Okay. Any other questions? Okay. So then, when are federal taxes actually paid? Well, in this case, right, you once you get your 940, your 941s, all those tax papers, and including your 1099s and your W2s, of course, that's where you're gonna figure out, right? How many payments do you necessarily need to do? Now, again, W 2s and 1099s are going to be things that you receive at the end of the year, which is going to pretty much tell the workers, the employees, how much money that the employer has paid them and how much taxes have they taken out. So that's irrelevant. But for you as an employer, your responsibilities are going to lie in your 940s, your 941s, your 943s. There's a bunch of them, okay? Depending on who you're paying and what you're paying. So if you're paying for federal income tax, again, that's 940. If you're paying for Medicare and Social Security, or sorry, FUTA is 940. 941 is your Social Security, Medicare. It depends on what you're paying. So in this case, because you owe this money, right, it really depends on your organization and how much you owe. Once again, because if you're a small business that only has 2 employees, right, and you're collecting money for the federal government, and your maximum is probably like $1,000 per or not $1,000, like maybe $200 per person, and per paycheck. So if they're doing 4 paychecks, and that's like what, roughly $1,000 per month. Okay. If you're only looking at $1,000 per month that you owe the government for federal taxes, you probably the federal government's not going to come after you. They might actually let you get away with making payments either quarterly, so every 3 months, or they might even be very generous and let you hold it off for a whole year, because you're not collecting the money that they need. Where if you look at a major corporation like Walmart, for instance, that has 1 billion employees and 1 billion paychecks that are being issued every 2 weeks, think about it. Where would the best place to get your money from for the federal government? Those major corporations, because they are constantly having employees getting paid on a bi-weekly, semi-monthly, and because they have 1 billion employees that's making billions of dollars, that has billions of dollars in taxes, you bet that the federal government's going to go after them first. So those organizations, usually their payments have to be every other week that they're not doing payroll on. Okay, so compare that to a small business that's barely making $1,000 for federal taxes. They're more likely to not care about you and care about the corporations that they can get the money instantly. Now in this case, right, there is a federal system that is collecting the money, and it's called the EFTPS, which is the Electronics Federal Payroll Tax System. Okay, so that's where your tax money is all going to be electrically wired to the federal government, right? No one's going to send a check for $20,000 and expect the federal government to cash that out. No, they rather you wire that money electronically through the EFTPS. Okay, so again, it really depends on the size of your business, how much money you're going to be collecting, how much liabilities you owe, to determine your pay frequency. How often do you need to pay the federal government? So you can, like I mentioned, you can, for smaller businesses, pay every year. You can pay every quarterly. And if you just want to be responsible, pay every month. Okay? But for major corporations, they have to pay every other week that they don't have payroll on. Okay? So again, it just depends, and you should definitely seek your tax accountant for better advice in this, okay? All right. So chapter review. We talked about payroll and what are the necessary components to compute payroll, right? We talked about who is on your payroll, which is going to be your common law employees and your statutory employees. Everybody else's are just mere expenses, and you just pay them for what the job entails. Okay? Again, other important forms that you should know. We talked about the SS4 form for the employee identification number. We talked about the W2 form and the W4 form that's required for your employees, and then 1099s, and then 940, 941, all of that, okay? And of course, if you want more information, go ahead and visit irs.gov/publication15, or just go to irs.gov and kind of explore that website yourself for all information in regards to anything that has to deal with taxes and businesses. Okay. Other things that we also took a look at today was we have 2 types of taxes that we have to calculate: employee taxes and then employer taxes. So the employee taxes include income tax withholdings and FICA, which is the Federal Insurance Contribution Act. So again, federal income tax is going to be based off of the percentage method, which is you're going to be utilizing the circular E-table for, okay? FICA, once again, is Social Security and Medicare, which is 6.2% and 1.45% for Medicare. Okay, just remember that Social Security has a cap limit of how much money you can put into. Okay? And then as far as the employer side, you have to match the employee's FICA. You have to do federal unemployment, state unemployment, and workers' compensation is a requirement. And of course, FUTA, once again, we're going to say that it's 6% for this class. Okay, SUTA is 3%, and workers' compensation is 1.36%. Okay. And of course, we talked about how to actually calculate the federal income tax withholdings, right? So this is the steps right here. And then we talked about how you journalize it. So in this case, we journalize it as an expense because that's something that you have to pay on during for the operations of a business. And these are the taxes for the employee side. And then, of course, we also have to address that we have to pay payroll taxes on our end for the employer side. Okay? Right? So, any other questions in regards to chapter 12? Okay?
Nope.
All right, then. Let's go ahead and take a look at the example here, right? Okay, so there are two examples that I'm going to go over, right? And let's go ahead and get started. Okay, so the first one here is the employee. We need the employee taxes first. So Bob here is a married man with 3 dependents, okay? And he files as head of household. Okay? And of course, and he only has one primary job, and he earns $19.50 an hour. And of course, he worked a total of 72 hours this pay period. And of course, he gets paid every 2 weeks, so bi-weekly. Okay, so use the table below to answer the following question. So in this case, for anything that I ask of you, I will provide you the correct tables, okay? But for the future, you're going to have to be able to read and know which tables to grab for from the IRS, right? The publication 15T, all right? But in this case, I will provide you all the information you need to know to answer this question. So in this case, you got table number 6, which is your paycheck frequencies. Okay, so in this case, right, the number of paychecks, right? And here's the bi-weekly table, which is for the head of household. Okay, and here are your ranges. Okay, so let's go ahead and answer question number 1. Solve Bob's federal income tax withholdings. So, what is step number 1 for Bob? Okay, how do you solve for federal income tax withholdings?
We have to find out how often he gets paid.
Yes. How often does he get paid?
Oh, bi-weekly.
He gets paid bi-weekly, okay? What else do we need to? How do we initiate the process of finding out his federal income tax withholdings? What's the first thing that you have to do?
When he's also filing as a head of a household, so we get those information how he's filing his tax from W2,
W4.
W4.
Okay. Okay. What else?
So he's filing as he wants taxes held as the head of a household, and he has dependents.
Okay.
And then we know how much he makes per hour.
All right.
And how many hours he worked.
Okay.
And how often he gets paid.
Yes.
So we got all those information.
Okay.
But I wasn't quite sure. I wanted to watch the video from yesterday's lecture to review, but it wasn't up, so that's where I'm stuck.
Okay. All right. Okay. I posted it in chapter 12 folder because I'm not going to create another folder for for just one chapter. So in this case, okay, so here you go. So we need to start off by figuring out how much money he actually earned. So we need to figure out what his gross earnings is. All right, how do I determine gross earnings?
So he's pay rate for an hour, $19.50,
Okay,
and he worked 72 hours.
okay, so,
So he's
okay, so 1950 times 72 hours, okay?
and his gross income is $1,404.
$1,404.
Yes.
Okay, good. Okay, what's step 2? Does he have any extra income?
No, that's his only job.
Yes, he only has one job and he's not filing married. He's filing as head of household, as in he's the primary sole income of the house. So in this case, no extra income. So that means we do not add any extra income. Okay? Did he take any extra deductions?
I don't think it doesn't give it to us, so no.
No. So in this case, we do not have anything extra. So in this case, his adjusted gross income or gross earnings is going to be the 1404, right? Add any extra income and then subtract any extra income. Okay, so that means he is subjected to be taxed at the full amount of the $1,404. Okay, so then what's step 3? I need.
So we use the table.
Mhm.
So it's the third row.
Third row, right? Because he's definitely earned more than 1310, right? He earned 1404. So in this case, he's definitely made more than 1310. But he's definitely made less than $2,896. So in this case, this is the bracket he's going to fall under. Okay? Or, sorry, not bracket, this row. Okay? So, how do we read this table?
So we withhold $56.40 for sure,
Mm-hmm.
and then 12% of his adjusted gross income.
No.
No. Oh, so we have to take 1310
Mm-hmm.
from the 1404,
Mm-hmm.
and then we calculate the 12% on that difference.
Good, right? This is the only amount that you have to multiply for in excess of. Okay? That's what it says at the top. So in this case, I have to take my $1,404, right? The government lets you keep $1,310, right, without taxing it, right, for free. So in this case, what's the difference between the $1,404 and the $1,310? How much extra money did he earn?
$94? No, $96. Wait. $94.
$94.
Yes.
Okay? Then we need to multiply it by the 12% because it's in excess, right? So how much
Yes.
money is he going to be charged in excess of that $94?
So 12% is $11.28.
Okay? $11.28, right? And then what do we do with the amount that the government's actually for surely going to take away?
We need to add that to $56.40.
So in grand total, what is the total amount of withholdings?
$67.68. 68.
$67.68. Okay? Now, we can't stop there because what did he claim?
He's claiming three dependents.
He's claiming 3 of his children. So in this case, 3 children. So on the form, for the W-4 form, each dependent will cost you $2,000 per year. Okay? So how much is that for the whole year?
6,000.
Yep. Let me. Okay? Now, that's for the whole year. I need to make this in terms per paycheck. So how do I determine how many paychecks he's going to be receiving?
26 for bi-weekly.
Is he on a bi-weekly? Yes, he is. So 26 paychecks. Okay? All right. And what do you get?
I have $230.7692,307.
So round that up.
Okay.
Okay? So there you go. It's going to cost him $230 per paycheck to cover his kids. So, what do you do with this money? We have to deduct it from his federal income tax withholdings, which in this case, if I were to take the $67.68, and I subtract this $230.77, how much do I get?
It's negative, so it would be 0.
Yes. So in this case, what was the exact number?
It's negative $163.09.
Good. So, and because of the rule that it says in the circular E table, it tells you that if this is less than 0, okay, which in this case it is, where is my caret? This way. If it's less than 0, right, that means your total federal income tax becomes 0. So in this case, we don't need to withhold any income tax for Bob because he claimed all his children. Right? So therefore, we don't withhold anything from him. Right? But that's just only his federal income tax. Okay? So what about his FICA? We have to take money out for his Social Security and Medicare. So Social Security, right? What percentage am I looking at?
6.2.
6.2 of gross earnings, which was 1404. So in this case, what is your total amount of Social Security if it's going to be 6.2% of gross earnings?
It's $87.048.
So federal government is all going to tell you to round up.
Yes.
Okay. All right. What about Medicare? How much is Medicare?
Um, 1.45%.
Good. So in this case, how much Medicare am I as Bob subject to have to pay?
So we need to round it up to $20.36.
Okay. Perfect. So now that we have the basic taxes for Bob, now I need to issue his check. So how do I journalize this transaction? what am I recognizing first?
His gross income
His gross income, okay,
is 1404,
okay,
and then for the debit and then credit, we have federal income tax pay, which is 0,
okay, so,
and then social security payable is $87, and next one is social security payable. It's $87.05. And then next to credit is Medicare payable, which is $20.36. And then his net pay is $1,296.59.
$1,290,
6.59.
okay, so,
That's
okay,
checking.
checking, yeah, because that's his net pay, right? This is the amount of money that we are going to pay him.
Yeah,
Okay.
and then for the debit, we use the salaries and wage expense.
Good. Because again, he worked in order to operate my business, right? So I have to designate him as an expense for the salaries and wages expense. Okay. Good. All right. So that was just dealing with the employee side of taxes. Now I need to deal with the employer side. So if Bob, okay, if Bob worked for 72 hours at $19.50, how much company FICA, which is the Social Security and Medicare, is Bob going to is the company going to have to pay for Bob?
So it's 1404 times 7.65%.
Okay, you can do that, or you can, right?
0.0765.
Or, okay, I'm going to put
Just
or.
copy and paste from his.
Exactly, because we already calculated, right? We already knew that Social Security was $87.05 and Medicare was $20.36. So I can just simply add those numbers up together. So $87.05 plus $20.36. How much total company FICA am I looking at? 10741.
Yes.
Yes. Okay. 107 and 41 cents. Okay. Good. So that's the FICA. So again, you can either do this, or we already solved it for above here. You just add these two numbers together. Or if they require you to have it separate, then keep it separate. Okay. All right. Number 5, solve for Bob's. Okay, solve for federal unemployment tax based on Bob's earnings. In this case, if Bob earned a total of $14.04, how much federal unemployment am I subject to pay?
At 6%.
At 6%. So what is 6% of 1404?
$84.24.
$84.20. 24. 20.
24.
Okay. All right. Now solve for, okay, this is actually supposed to be solve for state unemployment tax based on Bob's earnings.
That's at 3%, and it's 42.12.
Okay, so in this case, because you got 6%, if you just take half of that, that's going to give you the same thing as 3%. Okay, so you're going to get $42.12. Okay. Then solve for workers' compensation based on Bob's earnings. What's workers' compensation here?
1.36%.
Yep, 1.36%. So how much workers' compensation is the company subject to pay for Bob?
$19.09.
$19.09. Okay. So question number 8 is going to tell you that, let's go ahead and journalize for the company's payroll tax liabilities for employing Bob. So, what is the first thing I'm going to recognize, or how do I journalize this?
For the debit, we write payroll tax expense. And then my total came out to be $252.86. Oh,
250.
2 and 86.
Okay.
And then for all the credit, first one is FICA payable.
So you can either have FICA payable, or sometimes it's referred as company FICA or company Social Security. It doesn't matter in this case, as long as you can make a difference between the employee's portion of the FICA and the company's portion of the FICA. That's what you have to do. And you need to make a difference so the company knows that they matched the employee 100%. Okay. All right. And how much was that?
$107.41.
Okay. What's next?
And then next one is the company FUTA
FUTA payable.
Yes. That's $84.24.
Okay. And then
SUTA payable. It's $42.32. Oh, 13 cents.
it should be 12 cents.
Okay. 12 cents.
Yeah, because it's half of the FUTA.
Okay.
And then
The workers' comp payable is $19.09.
okay, so 1696. So okay, yeah. So that should give you a grand total of $252.86. Okay, and that's just one employee. Okay. All right. Now, how long did it take us to do that? That took us probably, 20 minutes? Now, imagine having to do this for 100 employees. Okay. All right. So, next one, last example here. All right. Right here says, okay, we have Susan. Susan is a single woman with 0 withholdings and has 1 primary job. Okay. She earns $25 per hour, and she worked a total of 38 hours this week. Okay, and this payroll period is weekly. So here you go. I provided the weekly table for a single woman. Okay, and this is her tax tables. Okay. So first things first, I need to
Determine her gross pay.
determine her gross pay. So in this case, what was her gross earnings?
$9.50.
$9.50. So in this case, we're going to take $25, multiply it by 38 hours, right? Because that's how much she earned, right? $25 times 38 gave you $9.50, you said? All right. What's step 2? Does she have any extra income? No, only one primary job. So 950 plus
There's
0.
no dependents.
No dependents, which you don't take it out at section 3. You take that at section 4. So the second portion is deductions. So did she claim any extra deductions?
I can't see it, but I do remember, I don't remember you saying any deductions.
Okay, all right, okay. So no deductions, okay? So that means her total adjusted gross income is going to be $950, right? Because that's the total amount she's subject to get taxed at. So looking at the table here, right, this is step 3, right? I need to use the circular E table. So if she's earned a total of $950, which percentage is she's going to be subject to have to pay? Or what subject that is she? Yeah.
Like I said, I can't see it, so those things you guys will have to do.
So we use the third row.
Third row, because she's definitely earned more than $447, but earned less than $1,052. Okay. So she's going to be subjected at a 12%. Okay. So how do I calculate this?
So she have to pay $19.80 for sure.
Okay.
Plus the difference of 950 minus 447.
That's 503.
Okay.
And then 12% of that is $60.36.
Okay.
And we add that to basic 19.8T for her total $80.16. Tax withheld.
Okay. And then, does she have any children that she claimed?
No, she does not have any dependent.
So 0 dependents. Okay, which equals minus $0. So that means her total federal income tax is going to be the $80.60. Okay. What about figuring out her Social Security? So she's earned a total of $950. What's the percentage rate here for Social Security?
6.2.
Mm-hmm.
And it's 58.90.
Okay. What about Medicare? What percentage is Medicare?
1.45%.
Mm-hmm.
1378.
Okay. All right. So now that we finish calculating her federal taxes, once again, let's go ahead and journalize this transaction to give her paycheck. So how do I journalize this transaction?
You debit salaries and wages payable, or however you've named it,
Good. Salaries.
for the 950. And then you credit, um, federal tax withholding payable, um, your social security payable, and your Medicare payable based on the numbers that you've got down there. And then checking is the remainder.
Payable and checking. Okay. So in this case, we got $950 for the salaries and wages. How much was the federal income tax withholdings?
$80.16.
$80.16. How much was Social Security?
$57. No, 58.90
And then the Social Security?
is 1378.
Okay. So in grand total, what should be her total net pay, or how much is she going to be receiving? How
I
much?
have 700. Oh,
Go ahead.
go ahead, Marcy.
No. Go ahead. How much is she going to be receiving?
$797.16.
All right. See that? She paid almost $150 worth of tax. Right? And that's typical for a single person that doesn't claim any withholdings. They get taxed at a higher bracket. Well, not higher bracket, but in this case, the more money they earn, of course, they're going to get higher taxed, right? And of course, in this case, because she's not claiming anything other, they're also going to get higher tax as well because no money is being withheld. So in this case, a typical person that's working for $25 an hour on a weekly paycheck, they're subject to pay $150 to taxes. That's a lot. And again, don't forget, if there's more, again, if they earn more money, they're definitely going to be taxed higher. Okay? All right, last one is going to be calculating the employer's responsibility for having Susan as an employee. So first things first is, what is the company FICA, okay, for Susan? Okay, we know that she earned $950, right? But Social Security and Medicare, which we already know, is $58.90 plus the Social Security or Medicare of $13.78. So in this case, what is the grand total of the company FICA?
$72.68.
Okay. All right. What is the federal unemployment tax based on Susan's earnings? Right? 6%. So what's 6% going to be? Because that's FUTA.
57.
$57 even. So in this case, what is state unemployment based on Susan's earnings? So in this case, if she earned a total of $950, right? What is SUTA?
$28.50.
Okay, so $28.50, right? 3%, which is going to give you $28.50. Last but not least, we need to solve for workers' compensation based on Susan's earnings. So, what is workers' compensation?
$12.92.
Okay. All right. So, last question is going to ask you to journalize the company's liabilities to pay for having Susan as an employee. So, how should I journalize this?
for the
Go ahead. For the
oh for the debit it's payroll tax expense,
okay.
and then credit is FICA, FUTA, SUTA, and the workers' comp payable.
Good. All right. So in this case, how much company FICA?
$58.
$58. Where is that? Oh, $58. That's Social Security. Plus Medicare for $13. Right, we got $72.68. How much FUTA, federal unemployment?
May, you're gonna have to read them because I can't see. My screen's not changing today.
Okay.
How much FUTA?
FUTA is um FUTA is $57.
$57. Mm-hmm.
No, AJ. Yes.
Mm-hmm. Yeah, you're correct. How much SUTA?
SUTA is $28.50.
Okay. How much workers' compensation?
Was $12.92.
$12.92. Okay. So in this case, how much grand total federal, not federal, how much grand total payroll tax liabilities is the company have to pay for having Susan as an employee?
The total came out to be $171.10.
Awesome. Okay. So in this case, not only do we have to pay Susan for $950 for all of her liabilities in her paycheck, we have to also additionally put in $171 just to pay for the other federal tax and state taxes for having her as an employee. That's already $1,200. Okay. So that is it for today. In this case, for chapter 12. Okay. I'm gonna go ahead and stop for a break